Think we're live?
Yeah, we are live and I was muted, but welcome everyone. Wishing you all a blessed Sunday. I was about to say Monday because we are used to go Monday on the turning points. How are you doing today, Versan? So many geopolitical tensions on the rise, military escalation. How are you doing?
I'm doing fine. It's just there's never enough material to talk about.
Yeah, I 100% agree. We did get massive news. I don't even know where to begin with. I think one of the most relevant news that we got today from the geopolitical standpoint that can also have catastrophic consequences for the global economy is the disruption of Hormuz Strait. That's for the ones that are not aware. Is the place that most of the oil supply is going through in a global scale. So apparently Iran already struck some ships disrupting the distribution of oil. How do you see that, Versan? I'm about to bring some live footage of the whole situation and some articles, and we're going to be talking about this. And then by the end, by the half of the live, we're going to shift that for how that's going to affect the financial markets, S&P 500, gold, silver, and of course, cryptocurrencies, XRP and BTC.
Yeah, a lot to uncover, like you said. First thing we have to recognize is that we're not in a traditional recessionary style and cycle. We've been in recession since 2022, and we're at the late stages of a global debt super cycle that mathematically cannot meet its obligations anymore. Once you start to understand this, you start to realize that everything makes sense that you're seeing. I'm talking about the wars, the propaganda, the inflation, the regulatory shifts, the digital currency frameworks, the restructuring of banking, and the quiet migration into this new financial architecture. So just to put a note on this is that geopolitical conflicts like we're seeing today, they're not random. Every reset that we've seen in major history has been accompanied by the geopolitical instability. Now, the thing is, before we get into the oil, and I'm going to talk about that, I have a question for the audience here. If you guys remember when Obama was president, right, and Biden, we ended up giving them about $1.7 billion in cash. I still ask, why the hell did we do that, right? It doesn't make any sense. Now, if oil starts to get blocked, which is the largest supply chain in the world, okay, that is going to create inflation like you've never seen before because everything is driven around oil. So, you know, it's incredible, man. They manage like 20% of the world's oil supply. That goes back and forth through there. So if Iran threatens that, and now I'm talking the propaganda, if Iran threatens to block it, conflict is going to escalate. And if tankers are targeted like the one we did see yesterday, then you're going to see oil jump instantly. And if that happens, then the markets are not going to wait for bombs to drop. They're going to price all the risk in immediately. And that can crash the market. It really could. Mm-hmm.
Yeah, we can see a reverse in the carry trade in Japan that can have some consequences also in the crypto space, no doubts. There is another article that I want to bring before I bring back the images. Just a second, I have to remove this and add this one. So, as you said, Versan, oil price is expected to rise. We are still uncertain to what's going to happen tomorrow to the financial markets. I'm particularly very interested on the S&P 500. That's still near all-time highs, and we were talking before behind the scenes that they have always chosen these attacks on the weekends, right? It really seems that is another way of extracting wealth from the masses. They have been heavily manipulating the markets in general, not only the crypto markets. I also believe they are manipulating the S&P 500. When you see that the S&P is near all-time highs, but simultaneously the price of gold is hitting new all-time highs, there is a disconnection of reality. And the last time that a similar scenario has happened was in the economic crisis in 2008. In the meanwhile, we had more strikes on Dubai, Doha. They are actually targeting as well Bahrain. And I heard that recent escalation in Saudi Arabia. Now, what I think about those strikes from Iran is that it's a way to try to prevent the United States to carry on more attacks on Iranian soil. So I think it's a military strategy, but because by the time they attack strong allies from the United States, like the United Arab Emirates, they are striking Dubai, then it causes the US to actually have to back off. I think it's an attempt to cause, like, let's say Dubai and the United Arab Emirates to say, okay, let's slow down the attacks on Iranian soil because these guys are now targeting us. So I think that's a strategy. But there's no doubt the situation, I think, is the worst it has been in terms of military escalation in the past 5 or 10 years. I can't remember of any other scenario. So tomorrow, when the S&P 500 opens, there is a lot that can happen, but I want to bring here the charts of the S&P 500. And I was making this analysis yesterday when Versant come to my video randomly. That was a fun moment. But we have to understand that crypto is still following the S&P 500, but this cycle has been quite concerning because every time that crypto was moving up, every time that the S&P 500 was moving up, BTC was barely moving. So every time the S&P 500 was correcting, then we had aggressive dumps in the crypto market. So I'm wondering what's going to happen tomorrow. Are we going to have a movement of these sorts on the S&P 500, or is just going to be another Monday in the another Monday in the financial markets? What do you think is going to happen tomorrow, Versan? I'm curious to hear your thoughts on that.
Well, we have to watch the oil price, and it's cyclical with the debt market. We'll get into that in a second, but oil is just not gasoline. So if they are blocking oil, then, and you got to understand that oil is transportation, oil is food production, it's fertilizer, it's plastics, it's manufacturing, it's global shipping. So it's pretty much everything that we use in our daily lives. So if oil does go from 70 to 100 just because of this geopolitical tension, grocery prices are going to rise, airline tickets will rise, delivery costs are going to rise, manufacturing input is going to rise. And that's a hyperinflationary reset, you could say. But you have to understand also, what is that going to do in the grand scheme of things? It's going to give, it's going to justify all the QE that we're talking about. And we're already starting to see this. They've been laying out the monetary policies, which I don't believe in monetary policy anymore. I will call it out for what it is. But they have been doing QE, stealth QE, quantitative easing, and they're not publicly admitting this. They're doing it stealth, injecting more liquidity into the system. We saw this in 2008. We saw this in 2020. In fact, we even saw this after 9/11, right? So more liquidity, more currency debasement, more asset inflation. What I think they're really trying to do here, based on all the geopolitical conflict, and it's very possible we actually financed all of this, because we gave them 1.7 billion. I think what they're trying to do is wipe out the middle class. I mean, it's pretty damn clear. I mean, all these geopolitical conflicts are bankers' wars. So they are in trying to wipe out the middle class right before they bridge us into the new system. At the same time, they are trying to create asset inflation. Okay. So all this conflict is just going to say, hey, we need to print more money. We need to offer stimulus here. We need to spend more. Okay. So I think that's ultimately what's going on over there.
Well, I 100% agree, Versan. Every war is a banker's war. This is what we have to fundamentally understand. So people not going to fall for the narratives and the headlines. You have to be very careful who are you listening to. There's a lot of propaganda. And in this podcast, we try to be as neutral as possible. We don't have any political alliances. We are committed to sharing the truth and the facts. And the last thing we want to hear is actually mainstream opinions, right? So just go back to what happened in 2019, 2020. I watched your video yesterday, by the way, Versan. I encourage everyone to watch his most recent video. And one thing that you mentioned in that video is that the pandemic was also some sort of a war. It was just a different type of war. It was a psychological war. And what allowed them is to actually print at least 40% of the currency that is in circulation in the United States was all printed between 2019 and 2020. So they already striked at the middle class. They already striked at everyone's bank accounts. If you understand that if you just held dollars, euros, pesos, or whatever fiat currencies on your bank accounts, you are actually being debased. Your money is actually worth less and less. And let's not be naive to believe that this conflict is about United States versus Iran, or actually Israel versus Iran. This is a global operation, actually. there's not a single country that has been not affected by currency devaluation.
Yeah.
To some extent, of course, it has been worse in countries like Venezuela, but that's the extreme of the spectrum. But that's happening to every single one of us. And honestly, I'm not someone that sits in my home. I actually live the life. I travel. I went to 20 different countries in just the past like 5 or 6 months. Last week I was in Dubai. I was in Saudi Arabia. So I do have an understanding of what I am talking. I talk to people from every place that you can possibly imagine, and everyone, for a reason, has the same complaint. Fiat currencies keep getting devaluating. The cost of everything is through the roof. And now we even have artificial intelligence that is another threat that's about to wipe out who knows how much percent of the jobs. So this is beyond just the war itself. This is a military operation, but to an extent that's going to affect everyone's finances in the entire world. And this war is another mechanism to extract the wealth from the middle class. And they really want to create two classes, either the super rich or the super poor. Yeah. And then, of course, it ties back to problem, reaction, solution, because once AI takes out who knows how much percent of the jobs, some say 20%, some say 50%, some AI scientists even say 90%, you're going to have a new class of individuals that now rely on UBIs. So at this point, universal basic income, that's what I meant. So at this point, they really coming out with the solution, and this is how it ties all back to the introduction of blockchain technology, the adoption of a system that is automated, where money is programmable, and where the world no longer follows the dollar as the reserve currency. Right now, as it was discussed in Davos, the end of globalization, that's the main topic of Davos 2026, is that globalization has failed, either intentionally or not. The fact is, right now, you don't have a trustless system. I mean, countries can no longer trust each other. That's exactly what's happening in real time. You have Russia that is already sanctioned and kicked out of SWIFT. And right now, it's more military escalations at a global scale. You're going to have countries that are going to start raising questions. You're going to have BRICS nations, Brazil, India, China. To some extent, they already understand the US has weaponized the US dollar, has sanctioned Russia. Today it was Russia, tomorrow is going to be us. And this is where it all ties back to the introduction of blockchain technology, most importantly, a neutral bridge asset like XRP, which, by the way, it never stops. It's a network that is designed for processing thousands of transactions per second without downtime. So it works independently of the current circumstances. It doesn't care if there is a war. It cares about efficiency and velocity of payments. And that's exactly why it all ties back to a global reset that has one single goal: destroy the middle class and introduce a new system that's blockchain based. It's basically a new technocracy. Say goodbye to globalization, say hello to technocracy.
Yeah, they just change titles, right? And if they say end of globalization is ending, everyone's like, okay, this is great, we'll cheer for it. But they don't realize that there's another shadow figure coming behind the technology. And we've done a lot to expose this over the years. Artificial intelligence is really the digital messiah. I think we talked about that a while ago, without going down that rabbit hole. One thing I do want to touch on before we drive us into where we're going with money and value altogether is all this conflict we're seeing again is about injecting more liquidity into the system. You inject more liquidity into the system, your currency debases faster. You create the asset inflation. Now, I just mentioned this, but the part most people don't understand is that inflation only makes the rich richer, okay? If you're holding hard assets like gold and silver or financial instruments, whether it be crypto, whether it be stocks, it's going to punish the wage earners and savers, but it's going to help the rich get richer by holding assets. So that's where things go in a different direction. For instance, while the middle class is getting wiped out, the banks are going to tighten their lending standards. Okay. So that means the poor, the middle class, they cannot borrow money when they need it. And banks lie to the people, say we do this to protect ourselves when the money is printed out of thin air. It's true. The central bankers are the greatest threat to the human race, right? And I hope something does change over there because inflation is the silent tax. Wars cost money. Debt expansion costs money. Borrowers have to spend money. And the sad thing is the public, we pay the bill. We always pay the bill. So I think that's what this whole thing is all about, really. It's about accelerating the demise of fiat currencies. And what you just talked about is the parallel economy. Basically, while all this is going on, and everyone's focused on the headlines, including myself to a degree, right? But I always report what's under the surface. The legacy banking systems are building a parallel economy and they're getting ready to migrate all the capital in the world into this digital infrastructure. And that's why you see money and investment going into digital settlement systems, tokenized assets. Hate to say it, but central bank digital currency frameworks, you can call them a universal basic income if you'd like, stablecoin regulation, interoperable cross-border payment rails. So they're simply preparing the world for the next financial system. And institutions certainly have been far ahead of this, right? If confidence begins to break, which it already is broken in the debt markets, and that's really what this ties to, capital never disappears. So when markets tank and liquidity contractions play out and money is pulled from the markets, people are treated as exit liquidity. But the truth is it's moving, okay? It's moving historically into hard assets. And this is where digital assets, especially the infrastructure grade digital assets like XRP, XLM, HBAR, I might as well just say the names because people keep telling me in the comments, Quant, right? Quant is one of them too. But, if there's something we can talk about real quick, I did see a lot of this in the comments about, sorry, can you guys hear me okay? People are saying they can't.
Yeah, we can hear you just fine.
I think people need to turn up their volume. My mic is pretty damn loud. Somebody was asking about staking. I wanted to dive deeper into this before we kind of go into the final thoughts of this conversation. So before we begin, I've talked about staking before and earning yield. And I constantly get repeatedly asked about this. And I'm telling you guys, I want to be very clear that there's a time and place for yield strategies. I don't think this is it, especially with all this going on in the world. The price of XRP, the price of most crypto, it's really stagnant. And that's because institutional demand has not actually triggered the true supply shock dynamics we've been talking about. So I think if you're staking XRP right now, you're simply putting yourself at the forefront of counterparty risk without any meaningful upside because everything is still denominated in dollars. So it's like you're locking your liquidity in a very immature infrastructure environment. And that's where we are. We are seeing the developments of all of this, but I think we're still early because the digital asset ecosystem, despite the fact we see all this news and headlines about these developments, the infrastructure being built, there are so many security vulnerabilities, regulatory uncertainties. And I'm sorry, but there are a lot of actors in this ecosystem who are trying to separate investors from their assets. I've noticed that, and I've reported on it many times. Cold storage is control. Custody is sovereignty, self-custody. So for all those people recommending institutional custody, I don't recommend it. You guys know this. I recommend personal control, wherever it's possible, even with hard assets. So back to the yield. I don't think it's a strategic plan right now until real demand drives price appreciation. Basically, when the supply shock meets institutional capital inflows at scale, then the yield strategy will become a logical approach to this because the underlying asset is now in an appreciation phase. So until then, you're taking the risk for a marginal reward. And, there are so many nefarious actors in this ecosystem. And I think we're still in the early stages of all of this. So just simply protect your base layer at the moment. Yeah, I know my brother promotes I Trust Capital, but we disagree on that. And I've told him my reasons before. So I think everyone knows my view here. I'm very blunt. I've been telling you guys how I approach all of this for a very long time.
I agree with you.
I Trust Capital pays a lot of money, and I refused it. And I've shared this before, how many times I've been approached with opportunities. The truth is, I make good money. I'm happy. I'm content, and I will always, look out for the community's best interest. And that's why people subscribe here and they trust me. I've met with millionaires on calls. I've told you this, Edo. And I asked them, the first question I asked them is, why are you talking to me? You could certainly pay someone a lot more money and hire some of the best people out there who have way more experience and wisdom than I do. And they said, I trust you. Okay. So I really, I do look out for the community in many different ways, but more importantly, this is what I do. So I'm simply sharing my strategy with you. And let me tell you something, it has served me well. Okay. I warned people in 2022 to stay away from Link 2. Remember Link 2? They went bankrupt. 6 months before FTX collapsed, we called that here at the Black Swan Capitalist. And I've given a lot of insight into where these things could break. And this is kind of what I'm talking about as far as staking and earning yield. Like, the market is not mature yet. I know it sounds crazy. We're in the early stages still. We really are. Right. And that's why like XRP and all these assets are so cheap right now. We're still in the early stages. So just be mindful. There's a lot of nefariousness out there. I don't recommend it. Now, the developments are quite interesting, and I'm happy to talk about that. It's just there's a time and place for you to stake and earn on your XRP. But until then, protect yourself at all costs. I mean, look what's going on in the world. We're in the early stages of the financial system breaking. Why would you risk anything out there? And by the way, our infrastructure, our digital infrastructure, our financial infrastructure thus far is so vulnerable. Like, somebody could hack our banking systems. Someone could, I don't know, use an EMP. Our financial infrastructure in New York City, Wall Street goes down, everything goes dark. 10 days of darkness. You guys remember that? So just be very cautious. That's all I'm saying. And of course, do what you want. This is not financial advice. This is friendly advice.
I agree, Versan. And just for people to understand the big picture, when you stake XRP, you need to give away self-custody. So there's no native staking on chain. In other words, to generate any sort of yield with your XRP, you can't be holding it to your cold wallet itself. So you need to give away self-custody, and you need to trust centralized entities. I'm not naming any of those entities here. It's just that, as a matter of fact, as Versan said, this yield is going to be measured in dollars, which is just like, it doesn't make any sense at these early stages that you're going to give away the most important piece of the puzzle, which is self-custody, and you're going to be aiming for what? A 3% yield, a 4% yield? At this point, you can buy treasury bills. I mean, you will barely keep up with inflation,
Very funny, actually.
Yeah, I'm not interested in generating yield out of my XRP at these stages. I'm waiting for the right time. I think the moment will come when you will not need to sell XRP to generate yield. And at that point, you're going to have perhaps, like, let's say you're going to have a contract with a financial institution like Bank of America or Santander, and you can know at that point that you're not going to be taking risks. But we still need quite a few steps until regulation is in place. The Clarity Act hasn't even passed yet. We also have the Genius Act that is being discussed. So I don't think you should rush to try to generate yields. We are still at very early stages. And another interesting thing is that usually when they lay out some sort of yields in digital assets and staking, I remember this, I was a victim to some degree, because usually it anticipates an explosive movement. So they lay out yields already knowing that the asset's going to appreciate in time, so that's a lot of people that are going to be holding the underlying asset cannot benefit from the price appreciation because now you are locked. So for example, I'm not saying XRP because in my case, even if XRP goes, let's say, to $5 or $10 or even greater numbers, I'm not interested to sell the XRP, but it happened with other digital assets that I bought it and I staked it. It went up substantially. And then guess what? I couldn't sell it. I couldn't take profits. And basically all of the useless yield that I made out of that staking, let's say 5% or whatever. And then what happens? The price went down and I was never able to take the profits with other assets just because I was taking it. So take staking as with a grain of salt. Is not black and white, but you have to be aware that when you stake, there will be some responsibilities and you have your coins locked, you're giving away custody, and you kind of lose the sovereignty over your assets.
Mm-hmm. I'm sharing here. I normally don't do this, but this is just a clip from my Patreon, okay, which is a paid membership, but I constantly have to repeat which assets I'm holding, and I feel like this is just an appropriate way to handle that. These are the assets that I own. And if you read down there, in fact, let me read it for you guys, okay? This is something I feel like I'm obligated to share with everybody. But I said here that you don't trade these, you own them, long-term cold storage, self-secure custody. Now, tier 3, this is the strategy I've always been sharing people. This is how I actually make really good money. And I don't day trade, but I do swing trade every now and then. These are the only assets I actually swing trade. SHX, VLO, and XDC. Now, don't get me wrong. If you go back to tier 2, I still have a position in SHX and VLO for a very long time as well. That's something I don't touch. But overall, these are the assets I hold. And I do have XDC as well. I should have put it in here. So I explain here that these are the technologies that I only invest in simply because they are the protocols that are going to serve as the foundation for AI machine-to-machine driven value transfer. We covered that actually last week. Settlement systems, CBDCs, UBIs, emerging AI finance integrations, things of that nature. Okay, so the digital economy, basically, and that's where it's going. So when people ask me about other opportunities in this ecosystem, believe me, I see the opportunity in many different markets in this ecosystem as far as liquidity cycles, long-term infrastructure, and so forth. But the truth is, I don't want to go outside of my jurisdiction of what I understand on a deeper level. Okay. Now, I've been covering a lot of these for a very long time, and I know for a fact that each of these are actually integrated on a different level in the financial system. Listen, I'm not going to say anything bad about other opportunities, guys. Okay, you're asking about Zebek. Like I said, I will not go outside of my jurisdiction, and simply because having a diversified portfolio, I've shared with you, is very important. But remember, we're middle-class citizens, we're retail, we're not institutions. My point being that more diversified you are, it's a lot of headache having a lot of different assets when sometimes the market will climb. This happened to me before. The market moved incredibly, and I missed out on about 3 opportunities because I was watching all these other opportunities I was in, right? So I missed out on some incredible gains. I really did. What I'm trying to say is that the more diversified you are, the return on your investment will be less and less and less. Okay. The idea to make real wealth in this ecosystem is to have the research, have the conviction, and stay to what you understand most. I understand these systems very deeply. And that's why I have a large amount of my dollars, my hard-earned money in these technologies. When the market moves, I guarantee you I'm going to be making millions of dollars, is what I'm trying to say. The more spread out you are, you're not going to make that much more money. Okay. So, and that's a fact. Even Warren Buffett, and I don't listen to Warren Buffett, I think his information is outdated. But he said to become incredibly wealthy, all you need is 5 major investments. That's all he said.
Right? Bersan, as we were speaking, I was bringing his quotes simultaneously because I know his quote.
Yeah.
And I 100% agree.
Yeah. If you're going to be in Zebek, then make sure you have a large damn position in there all right, for a long-term and a short-term strategy. That way you can actually take profits, because markets never really climb higher and higher forever. You do have these liquidity cycles where markets contract. And when markets contract, most people get liquidated. You have to concentrate wealth in a few things. Now, I have heavy positions in everything I just showed you, very heavy. In fact, some of them, I've been sitting on them for years, and they've made me a large amount of money, right? I got in very early also. I got in XRP at 18 cents. I got into XLM at 3 cents. So what I'm telling you guys is you're always going to be buying a higher high. I really believe that. That's called asset inflation. So you're always going to be chasing a higher high as your fiat currency keeps debasing at a lower low. So it's all structural, but stick to those technologies or whatever you're comfortable with. I'm not going to tell you what to do, but those are what I'm involved in. And I've been holding them for a very long time. I've made a lot of money on them. Long term, I don't touch it. It's for where the money is going, the future. And I intend to utilize some of those systems based on how it plays out. The only thing is, if we have digital IDs or something in my arm like a chip, that's something I've told people I'd sacrifice all my wealth, to have my soul, if you will.
Yeah, I agree with you, Versan. Over diversified is not a great move, in my opinion. Now, diversification at a healthy degree is good, but we're trying to hold like the utility coins that are going to play a pivotal role in the new financial system.
Yeah.
And I myself, I even eliminated a lot of assets from my portfolio that I didn't have conviction. And I truly believe that will serve you well in the long term, especially with the Clarity Act. It's not what people think it is. It's not here to actually help the crypto markets and this fairy tale. It's more about wiping out the majority of the projects that are not compliant with regulation, with heavy regulation. So they're making actually a regulatory burden for the majority of digital assets. So there's a high chance that 95% of projects will never recover from the current lows. And that's exactly why, despite focusing on the technology, you also want to focus on the political alliance of the financial enterprises that are running the projects. That's why we do some deep research on Ripple, Stellar, Hedera. It's not only about the technology, although technology is an important piece of the puzzle, but it's also who is behind it. And that's exactly why we have been studying Ripple for almost a decade now. We truly understand its roots deep inside the financial system. In my personal opinion, and not only opinion, I do have evidences to support that Ripple is not even a private entity, but we have discussed that in details multiple times. Versan, do you want us to talk a bit about precious metals? Because I'm very curious to hear your thoughts. Where do you think gold is going this year? Because we all know that gold is the real hedge against inflation. It's not Bitcoin. And with so many geopolitical tensions and military escalations, what's your prediction for gold in the next months to come?
Okay, so what's become very clear, this is something I'm going to be talking about with Andy Scheckman tomorrow on the show, so I hope you guys can join us for that. I'm going to ask him to break it down further, but based on my research, gold, we already know gold is being remonetized, but guess what? It turns out silver is being remonetized as well. Yeah, that's like really big. And that's also another reason why there's so much manipulation around the metals market. If they can manipulate the metals market, they can keep scaring people and fearing people into dollars. And that's exactly what they're doing. But at the same time, they use the leverage trades to profit billions. Okay. But at the same time, to keep the prices artificially suppressed so they can keep buying more with all the fake money that they're printing. They're basically printing money, manipulating the markets. They control the regulations. They control all the hedge funds and institutions, so they can suppress the market while printing money out of thin air, killing the middle class, wiping them out, and using that fake paper money to go buy everything we can't afford to hold on to, because the systems tied to the regulations keep us in check. You must pay your taxes. You must pay a higher price for goods and services. You must interact within the frameworks that they put that are all based on the dollar. Like I've talked to the people down here in the building, and we're good friends, me and the management here. I always have these discussions on a deeper personal level with individuals, and I'll ask them, do you guys accept gold? Do you accept silver? Do you accept crypto? And by the way, every time I say that, they say, you mean like Bitcoin? And they're like, no. So they don't know anything about Bitcoin, I mean, or the crypto industry. But my point, though, is that people don't have a financial education about what's going on in the world. So people can't adopt to something they don't know about. Right. And that's where things get a little scary. So we're all forced to work in this system. Now, what I'm talking about, gold and silver being remonetized, this is our final milestone of freedom being taken away. They're buying up everything they can. The crazy thing, though, is that if we're going to remonetize silver as well, that means, or gold or any other asset out there, it's going to have to be repriced in something outside of the dollar. And that's where things get a little crazy, right? So it's not theory. It's not nostalgia. I promise you guys, this is policy and regulation in motion right now. And we're already starting to see this. So if you look at the Basel III, for instance, right, it's not a barbarous relic as people treat it. It is a monetary instrument, and that's why they're buying it. Okay. So when you factor in how much money is out there, I'm talking about M2 money supply, all the QE, all the debt, you're looking at a very high gold price. So when you ask me a question, I have a problem going into too much detail because there's so many levels to all of this. But the United States Treasury, for instance, if they're going to be monetizing through stealth QE, their deficits are going to be structurally permanent. And if that is the case, which it is, you're going to see more weaponization of the dollar through the sanctions, through weaponization of everything else. Then gold is gradually going to continue and continue and continue to become the neutral settlement collateral. And that's because gold carries no counterparty risk. Silver will not carry any counterparty risk as well. Can't be frozen, can't be defaulted on, can't be printed, and it's very expensive to get out the ground. So quietly, the central planners, they're shifting the reserves to gold, and I'm not even kidding, now silver as well. So they are diversifying as well. Okay. So when you ask about the price, all you got to do is look at how much debt is out there, how much dollars, how much the leveraged markets are. Imagine that. There's more paper trades on silver than there is physical silver in existence. Here's the crazy part, Edo. If we are going to the blockchain, which is all about transparency, that's going to force price discovery. That's going to be crazy. Right? If you think about it a little deeper, maybe they're manipulating the markets the way they are because we saw them going parabolic. Now, they couldn't allow silver to go higher than 120 because it was going to break JP Morgan. It was going to break the big banks. Somebody got really screwed here. Okay. Because price controls are shifting to the east. And it's very possible that they're doing all of this to structurally keep it at a price where they can offload those debts and the margin calls that they had while still being able to buy it by getting access to the central bankers. The money comes there first. And what they're doing is buying as much time as they can before we go full scale blockchain. Because when we do have price discovery, you're looking at, I mean, Clive Thompson told us it was going to be $87,000 an ounce of gold in 2022. We recently just passed $40 trillion. And it's only going to accelerate. In my opinion, by the way, I think it's over 100 something trillion because we do have a parallel black market as well in the economy, a different economy for the cabal, if you will. So price discovery is going to approach very soon. The COMEX is in big trouble. The LME is in big trouble. Andy's going to explain all of this in detail tomorrow. But we know what's coming, higher prices. And then, of course, you have asset inflation. So there are just so many different levels that can answer and confirm we're going to see higher prices in gold, silver, and even copper. I started buying copper. Remember, Edo?
We spoke about it, yeah.
Yeah. So I'm very excited, man. I sleep good at night knowing that I have, I don't want to say numbers here, but I have a significant position of my entire wealth in physical assets. And then the other half is in the settlement technologies, the cryptocurrencies, the blockchain protocols that I believe are going to have real value in the economy. Okay. If you're still buying Bitcoin, guys, by the way, I'm telling you, I don't care if Bitcoin goes to like $200,000, $300,000. Your return on investment is going to be significantly minimal compared to investing in something that is still tied to Bitcoin, unfortunately, when it climbs higher.
Yeah, those are facts. There's a lot to unpack. I already hear rumors of a silver shortage. I was told by a friend he tried to buy some physical silver. He was not even able to buy it in Egypt, by the way. I don't know the situation in America, but we do have signs of a silver shortage. We do have signs that metals are being suppressed. I want to remind you all that a couple of weeks ago, actually, I think it was a month and a half ago, when we had that massive silver correction, that it dropped from 120 all the way to, it was like a 40% red candle. Just 1 week before, they had listed silver in the derivatives markets of Binance, which is known to be a markets manipulator. So they actually used the futures markets to actually squeeze short positions. They crush the price so that central banks can buy it at discounted prices. That's exactly what they have been doing with the prices of precious metals. They need the physical assets. The same goes for copper, which there is a massive industrial demand for copper. You actually gave me the conversation about copper, and I went to do some research, and despite the fact that the chart is extremely bullish, it looks ready for a massive price explosion, but there is incredible industrial demand for copper. And when you have industrial demands for an asset, it's not the same as if you hold, let's say, a stock, right? If you hold a stock, people can trade the stock. You have the option to sell it. But when you're talking about real demands, and this principle, by the way, also applies to utility coins, but when you have real demands, you don't have the possibility that people are going to be dumping it, because someone else that needs the underlying asset is going to outbid other buyers. So it really creates this sort of perpetual run for assets, and I think that's going to happen with copper, and that's going to happen with digital assets. We can't forget there will be an intersection between digital assets and precious metals. More specifically, I believe there will be an intersection between XRP and golds. Yes. Both share very similar capabilities when it comes down to being a neutral asset. You see that Russia is actually bypassing the US sanctions by being kicked out of SWIFT. They are using golds to actually, they are adopting gold as a currency, but of course, you do have some limitations. As Versan was explaining, it's very heavy to transport large sums of gold. It takes a lot of effort. So if you could just have a way to tokenize gold on a blockchain and then instantly teleport gold across the world by actually tokenizing it and having it backed by real golds, then you could have the perfect balance between blockchain technology and gold. Hence why David Schwartz once came out and said that XRP is digital gold. And if you just tokenize golds on a blockchain, it must be a blockchain that is effective, that's deliver fast finality. Otherwise, and Brad Garlinghouse used this example once, that if you were to settle large sums of money using BTC, you would make it more easy to actually just put the gold on a private jet and fly around the world because it's just faster. So to really solve this issue to the core, you need a blockchain that delivers faster finality than BTC and the traditional banking system. You can't rely on Nostro-Vostro accounts for global settlement, hence why XRP is meant to be the global reserve currency. And right now, with this whole war narrative and military escalation, it's really seems that we are getting close to the global financial reset, and ultimately, the one coin that's positioned for both a liquidity crisis and the demand for a neutral bridge assets is specifically XRP and XLM.
Yeah, a lot to unpack in what you said, and I love the way you worded it. But yes, gold and silver are being remonetized as strategic assets. Tokenized precious metals are coming online to secure wealth in a digital era. We're already seeing this. People keep talking about Tether. Well, Tether was involved in a lot of nefariousness, and the fact that they're running to gold as well, that means now their original Tether stablecoin most likely will fail. I mean, that's some confirmation over there anyways. The fact that you're having this intersection, this is exactly where Ripple and XRP come into the conversation. People have to understand it. They're saying like Tether is now involved in this whole gold thing. I've covered this before, right? But what does XRP have to do with this? You have to understand that XRP is a neutral bridge asset. Okay. So it's going to help facilitate the movement of tokenized assets. That means Tether Gold too. So it still complements the entire ecosystem. And that's simply because it is a token that has the agnostic capabilities beyond the control of any single nation. Tether doesn't have that. So, get your facts straight. We keep going in circles about all of this. And sadly, I think this is all part of the narrative containment and propaganda that is shaping your perception, right? There's manufactured narratives out there when people are still missing the plumbing. They're missing the infrastructure. They're not looking at the big picture. And that's where, it gets a bit confusing. But the narrative is shifting. It's becoming very, very clear now where all of this is going. And it's all tied to mathematics, something I'm not really informed. I don't know a lot of math, okay? But the truth is, this is the way I see it. If sovereign debt, which is really another driver of the liquidity markets, continues to expand, and the gold reserves are still, and silver reserves are finite, then the ratio between global debt and gold is going to have to become unsustainable in its own way, meaning you're going to have a very, very high price. And in such a system, I think that's where XRP can play its role, being that neutral bridge asset. So it's a strategic reserve shift, but it's becoming very clear. The end game is going to have collateral in the digital world. So gold is not going to disappear in the economy. It's going to become that foundational collateral, right? And that's essentially what tokenized gold is. But you're going to need a digital settlement system in a world where you don't have neutrality. You're going to see neutrality regain its power. And that's what I think the big nations want out there. Anyways, been going around in circles for a long time.
Well, everything that we discussed here is actually unfolding in real time, and we just anticipated all of this political craziness that's happening in the world. When you think of Tether buying gold, is just, in my opinion, they are just buying their way out of trouble.
Yeah.
Why would they be holding to an asset like USDT, which is not backed by nothing, is not even backed by real dollars? Even if it were, considering that dollars are continuously getting devaluated, that would not mean nothing. Now, they were fined, here is the article, $42.5 million because they were lying about their USD reserve. So it has never been fully audited. And from my understanding, they are buying gold to buy their way out of the situation, not because they want to protect investors or to actually back USDT and bring a new Bretton Woods system on a stablecoin. That's not happening with Tether. I'm sorry to disappoint you, but I don't recommend anyone to be holding to dollars in their bank accounts, but I even think that holding USDT is even a worse idea. We know that with war, we can have a financial freeze at any time. That's why it's important to be holding tangible assets like gold and silver, and to be having your XRP and XLM in cold wallets, having self-custody. So if there is an exchange failure, you're not going to be affected. The more geopolitical tensions and military escalations, the more we're going to have events in the magnitude of a financial freeze, for example. Jim Rickards discussed about that in details. So we have to be prepared, and being prepared means not doing what the masses are doing. So that's why I limit my exposure to stable coins. I limit my exposure to staking platforms. I don't stake XRP. I don't try to rush things out and generate a 3% yield out of my XRP. And I think at this point, you need to be focusing on wealth protection. And I truly believe that the best way to protect your wealth is with utility coins. It's not only about XRP. We are moving towards a system that will be interconnected. And the key word here is actually interoperability. So we need systems that are capable to connect with each other, systems that deliver a faster finality than traditional banking systems. And this is all part of the puzzle. You have XRP, Hedera, HBAR, Algorand. I think Versant shared a fantastic screenshot from his Patreon. I highly recommend everyone to pause the video before, take a screenshot, study that assets, because ultimately that's the foundation of the new financial system. It's not going to be one asset to rule them all. It's going to be a basket of assets, but that doesn't mean that every asset in the crypto space is going to succeed. That's why you need to limit your exposure, get rid of speculation, get rid of meme coins. And the same applies for BTC. Even if it goes to $200,000, wow, that's what? It's a 3x. It's not going to make generational wealth to anybody holding BTC. And I remember we discussing this here. When BTC was trading at, I don't know, $50,000 or $60,000, by that moment on time, XRP was 40 cents. And I remember discussing here with Versan, and we were telling everyone, okay, nice, even if you buy BTC and it goes to 100K or 120 or 150,000, that's barely a 3x, you know. So we have seen XRP massively outperform BTCs. It went from 50 cents to above $3. That's over a 600% increase. BTC did barely a 2x. If you compare BTC price in 2019, the all-time high was $69,000. Very concerning. Now we are actually below the all-time high from the previous cycle. And if you take inflation into equation, it really means that BTC right now is even worthless than it was 5 years ago. So where is the concept of a store of value, which a lot of people in the BTC community like to allude to BTC as being a store of value? How is that working out for the ones that bought above $100,000? I really don't see it. So it's not working as a store of value. It's not a currency. If we go the white paper clearly states a peer-to-peer decentralized electronic cash system. We know it's not electronic cash. It doesn't function as a currency, and it has now failed as a store of value. So people need to understand, we're going to have assets playing a pivotal role in the new financial system. Utility assets. At this point, it's inevitable. They can't be following BTC anymore. How can you be processing trillions of dollars in cross-border payments and derivatives markets, tokenize a huge part of the assets at a global scale, and still be responding to a 5% correction on BTC? That's unthinkable. That's why I truly believe we're going to have a decouple. And the war that we are watching right now can be the catalyst for the beginning of the global financial reset that ultimately leads to XRP as a global reserve asset.
Mm-hmm. Yep, we've covered this extensively. In fact, I think I'm going to publish this article because it's on the Patreon, but it explains in detail what our friend Jesse was talking about the other day, how XRP becomes a global reserve asset, right? And it meets all the criteria. So whether the escrow is released to the IMF, that's a whole different discussion, but I think in some way it could. As far as where this is all going, layer one, it's happening in layers. You're going to have value through hard assets, hard collateral. That's what we have today. Layer two is where that value, that hard collateral, is mobilized through the digital bridge settlement systems. And layer three is where you have tokenized programmable finance. So you're talking about real world assets. Now, interestingly, gold already occupies that first layer. In the digital asset ecosystem, I'm telling you now, XRP actually has acquired that role. Okay, so I think there's a lot of noise in the crypto ecosystem still. So gold and digital assets are going to be moving hand in hand together, and they complement each other in many different ways. As far as the decoupling, we've covered that too. There is going to be a decoupling. It's just like, what is the crisis going to take to decouple? And I think it's the debt market, because Bitcoin is cyclical to the debt market. You know, I'm not sure when that's going to happen, but right now with stable coins, they can kick this thing down the road longer if they really need to. But eventually it's going to have to decouple.
This was a very interesting comment, by the way, that if you measure digital assets versus gold, they are all collapsing right now. And the same goes for the stock market, if you measure the stock markets against golds, is it really going up and near all-time highs, or this is artificial? That's the type of questions that people should be asking in these moments, because the artificialness of the stock markets being near all-time highs, it doesn't match the economical reality. How is that credit card delinquencies are through new all-time highs? There's a high pressure on the bonds markets. People have less and less money on their bank accounts. I just made a great example a couple of weeks ago. In Italy, people were asking for loans on the bank to actually buy Christmas gifts. So the situation is not good economically, not only in the United States, but it's actually a global scenario, and everyone's avoiding to talk about the fact that AI is going to play a pivotal role in this transformation as well. By the way, Versan, we are close to 1 hour. So let's wrap up our thoughts. We're going to go live tomorrow again. And by the way, at this rate, there is so much things happening that by tomorrow, who knows what's going to be the situation? Everything is happening so quickly.
Yeah. Let's do a live stream with Andy. I think that'll be good.
Yeah, that would be fantastic. At 12:15 CST, we're going to go live again. We're going to be covering some of the war updates. I know a lot of people are going to happen in the next 12 hours, in the next 24 hours. So there will be a lot to talk about. And I'm sure Andy is going to provide a great view about gold and silver. He's the great on that.
Yeah, certainly. It's going to be good. I'm looking forward to it. Just in the meantime, everyone take care of yourself and just stay away from the headlines.
Yeah.
That might be the best advice I can actually give today.
100% agree, Versan.
Yeah.
And stay safe, everyone. It's a lot of tensions. Let's see what's going to happen in Hormuz. Let's see how the S&P 500 is going to open tomorrow. Let's see how the crypto markets are going to react. Let's see the price of gold. It's just so much to cover. So we're going to be meeting you guys for the live tomorrow.
Sounds good.
I closed by mistake, by the way. The camera.
All right.
Just one thing I ask everyone: drop your location in the comments and drop some likes, guys. Help us with the algorithm. I think this is valuable information, and drop the like button as well. Click the like button. Yeah.
Thank you, everyone. Really appreciate it.
Yeah. Thanks, everyone.